Good morning, good afternoon, good evening, traders. It is May the 29th. I'm starting about 4 minutes early as we have news coming out at the top of the hour. And as you can see here, I built a position over the last 2.5 hours. And so I'm just waiting to see if I'm going to get paid. I'm looking to see if this is a low and if we're going back up. All right, let's bring up the calendar. Oh, before we go, these are my stop losses for the current trades. Right, yesterday's trading, if we go double check on that, yesterday's trading was contained right here and nothing else. And so today I was kind of making up for the lack of trades for this week. I started a little bit earlier, built a position, and here we are. My regular start time happens to line up with a news event. And so if we go and check that news event, we're waiting for this right here. Where'd it go? Right there, Richmond Fed. And then as soon as that comes out, we'll trade, hopefully, the reaction to the bullish side. Right, so I'm hoping to buy. I'm a buyer today. I'll tell you why here in a second. Well, actually, we have time. When I look at the daily, we're still on the outside of the channel, although a few minutes ago we were in the channel. We have not fulfilled the average daily range of 43. If we target 43 to the low side, it brings us to 8,100. If we target 43 to the upside, it brings us to 8,700. I think 87 is more likely considering we're outside of the channel, making higher highs and higher lows. Right, so I'm thinking we're going to end up here. And so I started building a position on the way down. All right, I started building a position on the way down. In the chat room earlier, I called out a swing trade right around this area here at 838, right there. I played 3 pips, but I'm sure some of you played for boxes. That if you added to your longs or added to your winners, basically you've been adding to your winners as the market's been falling, right? You've built a position. And this is it. If we look at the big picture right here, it's also formed an outside range, which is not uncommon, right? It's our trader's worst enemy. And so understanding where we are right here, approaching support, that would be a good place to take a trade, right? If you're not in any trades right now, just wait for the news. And if the news pushes lower, buy. If the news pushes up, you have to wait for a red candle to buy. All right, let's go take a peek at the hourly. So now we have a floor, we have a ceiling.
Richmond Fed Composite Index out early at 0.0. The time forecast -6.
No change. So we have our floor, we have our ceiling, we have our trend line that we've been retesting for a few hours, and I'm thinking we're going to go back up. I could be wrong. That's the plan for now. So in the 5 minutes, we start highlighting support and resistance from the past that might be useful in the moment. All right, so something like this. Something like that. And there's more inside. Right, there's all these levels that are glaring. There's one right in the center here. All right, so that's a good way to start. And then if we want, maybe we can assume there might be one here. If we look to our left, I'm sure we'll find a reason to find a level. Right? So we're just pacing them out with our mind's eye. And now we look to see, do we go up the ladder or down the ladder? Considering we have this trend line here, right? If we go back under the trend line, we have to give up on our longs. We'll have to wait and see what happens if we go here, right? Making lower lows would not be good. So when I look at this earlier, I thought maybe we would be making 4 boxes and it only gave us 3. That's okay. I don't mind. That's normal, right? It's what we would expect to be a normal move. And so now we're buying the bottom of this box, right? A measured environment. I'm buying. If it drops a little bit lower, I can still afford one more box down here. Considering we're playing probabilities built around, statistics, I'm going to be a long in box 4. And if it fails to hold in box 4, then I basically have no choice but to close out box 1 because stop losses are there. Right? I'm not closing box 2 until I get to those stop losses. Those are ejection seats. I don't rely on the ejection seat to stop the trade. My job is to figure out an exit. That's why I target break even. Right? That's why that white line is there. If we go down here, that white line, I'll put money here. That white line will come down, right? Closer to where I can actually reach it. So if we go like we do every day and suspect this is a low right there, put a box on that low, and we can see we came out of the box, came back in. So I'll take that box and put it on this low here and see where that takes us next, right? We expect one box at a time. Let me move this out of the way, zoom out. The market should be able to give us one box at a time. It's done so right here. Boom. Then we came back. Is it coming here? No, is it coming back or is it going to go up? It's just a way of making assumptions. Right? This is just a way of assuming what the next move might be capable of doing. Considering we're starting on time as a group, right? You guys are just starting now. So you probably have one entry because I took one entry. Right, so follow along and then buy on red candles. Right, you're not picking off every red candle. You want the reds that are at support, right? Stuff like this. Right, so if a red candle comes to here, that's an entry. Right, so basically you're buying when it's cheap, expecting it to bounce off of this. If it doesn't come down, we don't chase it. If it keeps on dropping, so if it drops into box number 5, I automatically lose box number 1. If it drops into box number 6, I lose box number 2. Right? If it drops further and further and further, I lose more and more and more. Right? But the goal is to target an exit well before the stop loss. Right? It's the ejection seat. It's not a way out. It's to protect the account. It's not to stop out the, well, it is to stop out the trade, but my job is to stop out the trade. Right, so we've closed one winner already, and it took us 5 minutes, 6 minutes. Right, let's watch for a little red candle pullback. We want to see it maybe at support here, around here would be nice. Basically where the original trade was. Right, if we don't get that, that's okay. We don't want to chase. So it looks as though we might be attempting to go up the ladder. I'm just going to change that so I know it's the trend line. So don't think we have much else on the calendar. The next piece of news is not for another 3 hours. So we are in the clear for now. There's a red candle at support. Boom. Right. If this is your first trade, this is also your box number one. So you have trade one in box number one. You're going to be allowed a few more. All right, take a second one if we come here. Boom, right there. Right, so now we have 2 trades in one box. I have multiple because I started earlier. If it drops, watch it drop outside and do something like that. Market can do whatever the market wants to do. We really have, the best we can do is adjust our, the way we react to things. Much like a sailor cannot really change the seas. Is it going to make a lower low, or is it going to bounce up? Right? If we remember the target for the average daily range, we're really not that far away. We're about 2 boxes in one direction. And if we go from the high, we're about 2 boxes or one and a half box from the opposite direction. 4 boxes. The box is just a way of, I guess, looking at things. It's a perspective. It helps me with perspective. It puts blinders on so I don't think too far away from the box. It really, we're trying to make money one box at a time. And if push comes to shove, we're willing, able, and capable to use 4 boxes. Right? And we know based on time of day, there are certain events that must happen. We just don't know the magnitude of the move, right? We know the timing, we don't know the magnitude. Right? So currently it's month end, right? 29th of May. So some of these bigger players have things to do before the end of the month. It's almost like a cat and mouse game. Right? Are we going up the ladder and stacking boxes up? Or are we going to go through the trend line and down the ladder and stack boxes down? It's a matter of probabilities. Something. This level here is what I'm looking for. Let's see how it reacts to this. If this is a swing low, as we speak, we are testing the inside of the swing low. If the inside of the swing holds, we go back up. If the inside of the swing fails to hold, maybe we visit this level, and then maybe we visit this, and there may even be another one here. Right? So inside swing first, and then the outside of the swing. So we have multiple opportunities to say enough is enough. You don't have to subject yourself to 4 boxes, and you don't have to eject. That's the idea behind targeting break even, right? Even though the market's going in one direction, it's ranging. And so within the range, that's, a range within the range, there's opportunities there to get out, even if you're, heading in the wrong way. Stuff like this. The market's going down. As long as it gets back and crosses this, right? So, which is quite doable. It's a probabilities game. It's not luck. The box just lets us see what the market has the capacity to do. Right? We've broken out right here. So a box should go on the breakout. But because we came back down, I'm just trying to figure out where to put this new box. Right? Should I put it on this swing here? I think I'll put it on there. Like this, and then see if we can make a full box. Like, can we bounce off of this? That would be, a good way off the ground. We're not making lower lows if we're making higher lows. It's almost the time for that, the end of that pullback we're looking for. This move right here, we're hoping will end somewhere around the bottom of the hour. That would be typical. Good old outside range. Let's go take a peek at our dollar index. Dollar index on the 4-hour. Current price is into resistance. Yields are into resistance. So there's a high probability that this rolls over. There's a probability that this rolls over. And that would bode well for our euro. The inside swing seems to be holding up. So far, so good. Right? We're testing the inside of the structure here. And then if it fails to hold, we're testing the outside of the structure as we're doing now. So is this the new low? Are we going here? What's happening? Oh my God.
Taking a look at the fear and greed index, 48 out of 100 equaling neutral, and the crypto fear and greed index, 72 out of 100 equaling greed. And looking at the VIX, currently up 8.91% at 14.06.
It's like he's sucking the microphone. I'm gonna take a trade right there. Basically, it's the edge of the trend line. All right, we're testing this level here. Yeah, somebody's asking what that clicking noise is. It's called tick strike. It's almost like the RPM in your engine. You can hear the volume coming through. So instead of having to look at it, you can hear it. And it doesn't go tick, tick, tick for the micro lots, right? It rings if it's worth ringing. And then there's also a different tone for bullish or versus bearish. And there's a different tick, a different noise itself for a news event. It's a function of the squawk box. Yeah, and Dan's talking about the 100 EMA. Yeah, I don't. The only moving averages I really use are the simple moving averages. And I use a 50 and a 200 on the 4-hour, sometimes on the daily. So that's usually the only places you'll see me using moving averages. And it's only because some of the bigger players use those same ones. I don't use EMAs or any of the intricate tools, just really simple things you can do with a pen and paper, and keeping it as simple as possible. And then this right there, right here, that's been holding us up for quite some time, right? That bodes well for our position. That's okay. It's just a frame of reference. You know, if you're looking for support and resistance, like reasons to take a trade, a horizontal line is probably the most reliable, right? Because it has one price across its entire length. The second best is probably a diagonal line, and it's only the second best because it changes its price along its length. And then the least reliable support slash resistance is a moving average. It's just mathematically unsound to expect something from a moving average. Right, here we go, testing the lower range. Where are we going? Where are we going? Oh my goodness, what's happening? There, just want to free this up so I can move it. Right, measured move, one box. Is it going to be two boxes? And then where do I have my next box? Ooh, close call. We'll see. Maybe today's a day where, we have to hedge. Where's our target? Our target is at 815 or so, right around where the stops are. All right, so those of you following along, you're now in a couple of long trades that are in drawdown. And so if you add a couple more, so you now have working trades, work in progress. The average of the work in progress is now your target. Now, you're not trying to make money anymore. You're targeting that break-even line. Right? In my case, that break-even line is two boxes away, which isn't in and of itself in the average move. Bottom of the box, I'm taking a trade right there. Just gonna adjust this. Famous outside range. And put that there just in case I needed to measure stuff. Right, look at the time of day. We're approaching the bottom of the hour. Hopefully it's the end of the bear pullback. Did I say bear pullback? There we go. All right, we just got to measure this stuff out. That way you can create an alternative outcome before you need to use it. Plan B, plan C. And then when the time comes, you just execute. You do what you have to do. If we go back up from here, an average would take us to 86. Right, so if we go back up an average daily range from this area, it takes us back to 86, making another outside range. Those following along, you probably have a couple of open trades, in drawdown, so to speak. Target break even. Targeting break even means we're building a position like we did here. We move the line down, and now that considering this is expected to be a measured move, there should be a resultant expected move. And that's what we rely on to get out. Move this up to the side so we can see. There we go. This is just for visualization. I can move it anywhere I want. If the market continues to go down, I'll just highlight it with this. It has the ability to go here and even more. This might be a day where we book losses. This is why targeting break even. If I get this white line before I get the stop loss, I'm going to take the white line, even if it's not all the way up. Gold is holding steady, not going up or down. 23.45. The best part is the move we're looking for can come at any time. The move we're looking for can come at any time. Come on. Oh, there's a lag between. There's a delay or a lag or something between this and my mouse. There we go. Just trying to stretch it out. There we go.
Third names former Goldman partner Hammack as president, doing Cleveland Fed getting new president Hammack, who is a former partner at Goldman Sachs. So Hammack to be replacing Fed's Mester, who retires on June the 30th. More information on Hammack, who previously served as co-head of global financing at Goldman Sachs.
How far are we from the top now? 38, 39, Here it comes. Might be the first losses in a while. Yeah, I don't want to hedge because it's just opening a can of worms. I would rather book the loss and then recover the loss. Let's see. Let's zoom in and watch it take me out. All right, we're at 81. Here it comes. We're right there too. So close. Yeah. And so we took one. I'm waiting to see if we take a little bit more and then I can recycle them. All right. Ideally, I want to recycle them at the bottom, at the edge of the box. I'll put one back on. Two. Three. I took 1, 2, 3. Right. So now if this is near the low and it does start to go back up, I'm just recycling these winners on the way back up. And so with any kind of luck, the recycling will eat away at these losses. Right. It's clearly upside down. Right. I've clearly given up a lot of profits, but I'm also not throwing away the game, right? I'm getting back on the horse. I'm continuing to ride. And there's nothing wrong with expecting a bounce. Right? Booking a loss is normal. It's part of the game. It's so close to. Like, watch within the wick. Within a freaking wick. Sometimes that's the frustrating thing. I've said it before. Every time I trade before my 8 o'clock window, I create a problem for myself. It's a good example, though. Makes for good show and tell. Movie material. All right, those of you that started at 8 o'clock, you're just in drawdown. Right, you're looking for break even. The move I'm looking for is still coming. It's probably coming right now too, which is a real piss off. Freaking probabilities. All right, so let's recycle the stuff. 3. And my stop losses are still here for the remaining trades. Probabilities tell us we normally find the bounce before we find the stops. And so this is a low probability event. That's okay. That's what I'm here for. All right. I want to recycle. Boom, right there. 1, 2, 3. For all I know, this is only 3 boxes. 1, 2, 3, and we can still go down a 4th. Right, so I have to save some money. I need backup for the backup. I'm going to just keep recycling on the way back. All right, looks like I just bought myself a couple hours of work. Red candle. I want to see it go a little deeper and buy more. That probably put a dent in the win rate. Put a dent in this. Win rate's dropping. Oh, that won't show. Yeah, it has to be after 3 p.m. Right. Where are we? Support. Good place for a bounce. Break even is still there, right here, and that's about less than 2 boxes. And so if I put money in here, I'm bringing down break even, which makes it more accessible. And I keep doing this, right? So as I keep recycling trades, break even stays put, and I get closer and closer and closer. Right. So as I get closer to breaking even, I'm also eating away at my losses or replenishing. Red candle. I want to see a redder. It was so freaking close too. Hmm. right? So assuming this might be a low, put the box on the low and then start measuring what the potential could be in the opposite direction, right? So if this is in the last recent swing and we're going back up, we can envision what's possible, right? Even a ever so slight move up. It doesn't have to go to the moon. It only has to go to break even. And then that allows us to walk away, reset, or in some cases, continue to trade, whatever it is that floats your boat. Yeah, every time I start before my 8 o'clock, I get myself into trouble. Every time. And trouble was 1 pip. I'll get better next time, I promise. I'm still looking for a dollar index to come back from its high. We're looking at this. We're still looking at the dollar index to come back from its highs. Recycle. Three. And I'm saving one for the bottom of the box. If I lose more, I lose more. It doesn't happen often, but we got to take it, present the other cheek, keep on going. It's not often that we have to recuperate stuff like this. And then when we hedge stuff like this, there's always the possibility that it just opens up a second can of worms that you can't control. Imagine creating a problem in one direction and then hedging creates a problem in the second direction. And so now you have two problems going in opposite directions. And so hedging is not always a way out. More often than not, it creates a bigger problem, unless it's part of the plan in the first place, which for me it wasn't. Not today, anyways. So I'll bite the bullet and we'll continue from here. Right, so if we assume this was the low, this is an outside range in a big way. All right, I'm just looking to break even. I'm looking to get back to halfway. Let's see what comes of this. Let's put back the box up there. I'm curious to see how far. Oh yeah, it's like not that far. We're right on the edge. Right on the edge. And if we go further, we go another box. Boom. That'll take out box number 2. I guess it's good for everyone to see what happens. Sucks, but I guess it has to happen. Gold is starting to roll over. Yep. Yeah, and there's window dressing and profit taking, all that good stuff. It's called value date. And basically, institutions have, uh, they'll use the second last day of the month as their last day so that on paper, it shows as being the month of May. It's a 2-day settlement. And so they have to be done on the second last day of the month. And that's what happens to be today. Right. So usually at the top of the hour, this last fixing of the month, that's when we'll see the volatility come back. I'm hoping. Yeah. Let's see what happens next. All right. Is this going to be a 4-box move? Typically within the 8 to 8:30, 8:45, it should remain contained to 3 boxes. This is why I'm surprised that I got tagged. Oh well, probabilities don't lie. They just don't always play nice. Right? If I pick up on the top, the very, very top there, and align everything well, it's exactly 3 boxes. Should have made this a reaction video. Not much to look at on my face, just very little reaction. Right, so we've created an average daily range. We've tagged our target exactly, and now we're pulling off. Anything can happen. Right? Considering the range is only 43 pips, the euro can do 43 pips with its eyes closed. Right? Let's go take a look on the higher time frame still. What's the weekly look like? Right? Weekly looks threatening. We did make a higher high. Right? We have a higher low. All of this can still turn around. I'll recycle one more. Trade number 4 right there. All right, so if we started at 8 o'clock and you've been following along, you probably have about 8 or so trades in drawdown with a break even somewhere in the middle of your risk. Right? And we're looking to bounce. Oops, I didn't want to change the size of that. Looking to bounce. Watch it come, take me out, and then bounce. Just, to make a good video. Right, this London fix that we're relying on, or that I'm relying on, is expected in the next 9 minutes. Yeah, I guess we can't win them all, huh? I guess it makes up for yesterday's mistake where I was trading with 10 times the size. It had to be too good to be true. The market's taking its money back. Superstitions. So close. So close. There it goes. Oh. Stop loss hunting. Is it real? I don't know. Close enough to feel like I'm hunted. I refuse to lose more than 36 pips. All right, that's my ejection seat. Nothing says I can't lose all my trades at 36 pips. I intend not to, right? But the limit is 36. That's the idea behind making 3 pips, right? Because of the high probability of success, I had to raise my personal standards. And so instead of losing at random, I'm now picked 4 standard deviations and I commit to losing at that number or less, right? So or less is breaking even. Right. So here's me with an opportunity to recycle again. Wait a couple of minutes just to see what comes of this. I don't want to throw it back in, just see it go further down. Right, so this would be a 4th box. 1, 2, 3, 4. All right, so that's 4 boxes on the current move. And we're going beyond the average daily range. Good place for a bounce. Right, there's our outside range, that purple line here. So our outside range is being fulfilled right there. Now I'm recycling. Yeah, that one's gonna hurt. I'm starting to take a little bit of a dip. Boom. It's all right. No biggie. All right, so now breaking even is here. If I recycle a couple of my trades, it will bring the break even closer to the edge. So the average of the 4 boxes is right in the middle here. All right, 1, 2. Now I'll just wait. If I can put a couple more lower in the box, I bring down the average, and then my break even is still 18 pips away. I'm looking to keep this average within 2 boxes or 18 pips. So all I need now is a pullback or a retracement and look at the time. And look at the time of day, right on time for the fix. And we're going outside. We're making a lower low. Yeah, the outside ranges are just getting crazier by the day. Dollar index is at resistance. Yep. All right. Remember that area we were looking for? We're right there. Right. We just pulled 4 boxes off right from 8 o'clock. Right, 3.5 boxes. I knew I should have started on time. No one else to blame but myself. Trying to make up for yesterday and the day before for the lack of trades. And I ended up creating a bigger problem. Right? Yesterday, we only did something like 7 or 8 trades. It was very, very little. And so I wanted to do a little bit more. And it's cost me a little bit more. All right, so we're in the recycling business, boys and girls. Whoop, whoop. Love it. Give me red right there. 1, 2. Yeah. Trading, unedited, unscripted. How many did I close here? Oh, they're on to me. The fix is right around the corner. The German PMI came out overnight, weaker than expected, and the euro weakened as a result. They're still talking about lowering the interest rates in June, which happens to be next week. Powell is not in the position to do that. So there's a divergence in the policies. We're going to be playing through that. I got to get my crystal ball back from the shop, man. This is not cool. Right, starting on time would have saved me this extra box on top here. I just want to recycle the trades all the way back up. And then maybe I can wipe that slate clean. Right? We want to be able to recycle this stuff and then at the same time eat away at the loss, right? These are closed trades, so that loss has been booked. It has to be recuperated, and we do that 1 3 pip trade at a time, right? It's no longer a challenge. I don't have to make 37 pips to feel better about losing 36. No, that's how it used to be. Not anymore, right? I lose whatever I lose, and I make it back 3 pips at a time. And that, with that shift in mindset, the recovery of the loss is super simple. It's just my average day job, right? Recycling on red candles like this. Right? So my break even is always nearby. It's not out of the reach of the market. I'm just having to survive is literally keeping your finger on the pulse and trying to figure out what is possible next and align things so that the market kind of trips over your exit, right? Which is what that is, right? Considering we've been falling now for 5 or 6 boxes, the next move is anticipated to be up. Right? And that's the recovery process. That's the recycling, that's targeting breaking even, that's lessening the pain than if we don't play the pullback and we just let everything take us out. Right? So either you watch it come at you or you duck. I choose to duck, right? I choose to try to do something about it. There's a lot to this that only comes from making mistakes. You know, you have to make the mistakes to know how you behave in that condition. And usually it's an emotional reaction that created the problem. Like it's misbehavior. I'm curious to see what will happen here. Right? Higher highs, higher lows. And then with time of day, the next event we have to look at is the banks in Europe getting ready to, setting up the close. With that comes typically some volatility of some kind. And so expectations are around the clock, but not necessarily worth trading. Right. So I choose this particular block of time because it offers me similar volatility daily, and then I can have a potential average yield every day, an average paycheck. Unless you encounter something like this, break your own rules, start trading an hour and a half too early, and then you end up paying the price. What's happening on our trend line? The fractal nature of the market, right? Everything that you see here repeats on all the other time frames, right? So if I can bounce off of a trend line on the 1 minute chart, a bounce on any time frame is also a real thing. Failure to bounce is also a real thing. Maybe we're bouncing horizontally off of a horizontal level, right? Best support or resistance. Right? Diagonal is second best, and the least favorite is always a moving average. Right? Even on the 4-hour, they're not very useful. They give us an idea, but you don't want to trade off of this. You don't want to play bounces off of the average. This yellow. Right, we'll see what comes of this, considering where we are right now. An inside swing before we have to test the outside. And that's a pretty mighty big 4-hour candle. I wouldn't be surprised if we gave back some of that. See, on the 1 hour, we went down the ladder. We drew the ladder exactly to the levels. These we just put on seconds ago. Inside swing, outside swing. A little bit of pain, anyone? What do I have here? 1, 2, 3. All right, already too many. Go back to the 5 minutes. I don't want to have this on here. It just messes with my mind. Yeah, I'd rather lose today. Hedging just creates a it opens a can of worms, and then sometimes you're stuck in the hedge for multiple days where taking the loss, you could recover this in this, probably quicker. Postponing a loss is not really worthwhile. All right, so I'm just gonna stick around for another 20 minutes, and then I have to go and do stuff, but I'm hoping to see a bounce from here. The daily could use a wick. A wick like this would be nice. Yeah, they heard me. We went through by how much? Half a box, almost 1 box extra. It's not atypical to do 1 to 2 boxes more than the average. That's ideally how you move the average up, and that's how you increase the average, by doing more than the existing average. And so it's not atypical to see the market try to do a little bit more than the average, right? We did 50, the average is 45, 44. It's the only way to move the average up, otherwise it shrinks. I'm just curious to see if the timing is right. I can feel pain. The pain is real. When you're in drawdown, it feels awkward, right? Let's take a peek at Dixie. Dixie. And Dixie's right up at resistance. What do we think the next move is? This is why surviving is critical. Right? Booking 1 or 2 boxes of loss is perfectly fine. Trying to survive this, because once we find the move we're looking for, that recovery is almost, it's just run up the mill. Recovering from the loss should not be an added or separate process. There we go. So assuming that's a new bottom there, if I can close 1 or 2 trades, I'll be recycling them on the way back up. Guts to love it. Show and tell. Yep. Yeah, it's the grinding, pocket full of change. If I can have a pocket full of change every day, I'm more than content. At the end of the week, I have, dollars while everybody else that's been trying to hit the ball out of the park is, going home empty handed. Once in a while, we get cornered like this because this, statistics aren't perfect and probabilities don't lie, but they are also not predictable. Right. So I do the best I can using my little boxes, and it boils down to assumptions and testing many, 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 many assumptions instead of one big one. Right. Same amount of risk, just better results. Yeah. Think of yourself as a whale eating a whole ton of krill. I look for krill every day. Call it skrill. Skrilla. Oh, I'll take one right there. Boom. Just so I can see this. Yeah. 1, 2, 3, 4. Yes, there's a couple up at the top there. I have to slow down with my clicks. Then we're just playing for some kind of a pullback, right? I'm playing for this break even. And if I can recycle along the way, I'm recycling along the way. Right? Every time I close a trade, the line moves back. And every time I recycle a trade, it comes back in my favor. And so recycling makes me money and keeps break even within reach. It is scary when you're in drawdown and things continue to escalate in the wrong direction. And hence we have an ejection seat, right? It's a measured move. By definition, the trades we are willing to take should be within that measured environment. Something like today where it's just borderline right on the edge of my 36 pips. This is the annoying part, right? We know that the system works, but sometimes it's almost too good, right? The accuracy, even on the loss side, is almost too good. I would have been fine with 40 pips instead of 36. We'll see. At some point, you have to say enough is enough. And that's why, raising your personal standards is so important. Targeting break even, right? Had a move to break even come before a stop loss, that's ideally what you want to do, right? You want to get out with little to less pain instead of a 36 pip stop, right? In our case, we just crashed to 18 pips without a bounce. That's okay. Nobody can see the future. Dixie is rolling over slowly. This here was almost foreseeable, right? Considering that big doji up at the top. But But the test of the channel is where I was participating, considering I should be able to withstand 36 pips. It's still unable to do the full box down here. That's why I'm keeping this here, expecting a rotation. Right on time. Yeah, quality drama. It's like watching an episode of Dallas. My mom was so hooked on that TV show. Oh my. Come on. I got tickled by 4 pips today. I'm in no mood to laugh. So that noise, that ticking noise, you can hear how the tone changed when it turned to green. And when it's red volume coming through, the tone changes. And then depending on the amount of volume coming through, the speed, it's almost like the RPM in your car. Yeah. The waiting, come on. Seven. Come on, come on, come on. Just want to see it go back up 1.5 boxes or so. Just give me a wick on here. And even if I don't get this move right now, in the next few minutes, the next candle, right? So tomorrow's candle, even if it is going lower, which we don't know yet, maybe it has to go up before it goes down, right? And then if tomorrow's candle goes up entirely, maybe it has to go down before it goes up, right? So anything can happen. That's the idea, right? We prepare for anything. We have an alternative besides plan A, right? So plan A is make me 3 pips going that way. Plan B, C, D, E, all the way to Z is, how am I going to find break even? And that's where you have a plan and the funds to execute the plan with. Eventually, you know where you run out of funds, right? You know where your plan can no longer survive. If you pace it out, if you go slow, mini lots, micro lots, you can have a 20-year career before you blow up. We're just trying to figure out the next move. We don't really care about the current move. The current move, which was on the way down now, is measured to have ended. Right? So we're looking for the next move to make our money back. So I'm going to let you go here. I have stuff to.
Exxon sees oil demand at 100 million barrels per day in 2050, about the same as today.
I have stuff to go take care of, so I'm going to leave you guys be. I'm going to finish the recording here, but I won't upload until these trades are closed. So somehow, some way, somewhere, I have to get out of these positions before this video makes its way to YouTube. Right. So when you see it on YouTube, you'll see how it ended. Talk to you guys tomorrow. Same link, same everything. If you guys have longs right now, target break even. All right. Enjoy yourselves. See you guys in the morning. Bye-bye.